Hi everyone, and welcome to ABG Investor Days. My name is Nikola Kalanowski, and I'm an equity research analyst here at ABG. With us today we have Christer Magnusson, CEO of Nilo Gruppen. The idea is that he will present Nilo Gruppen to us for about 20 minutes, and then we will have an opportunity for a Q&A for about 5 minutes. And with that said, Christer, the floor is yours.
Thank you very much, Niklas. I will, as said, make a short presentation of Nilo. Hopefully after this presentation you will have an understanding of the journey, where we are coming from, where we are heading towards, the change of the business and the challenges and the opportunities we are having. Next. Our vision is to be the best label and branding company worldwide. It sounds very ambitious, and it depends what you put with the meaning by the best label and branding company worldwide. We're not necessarily the biggest, but we should be innovative, we should be transparent towards the client, we should be creative, finding creative solutions, we should be fast. We also proven to be successful in this business. You need to be fast, deliver fast samples and so on. And we should be a reliable partner towards our client. And they should know what they get when they are doing business with Nilo. Our slogan is adding value to your brand. It's an old slogan we have had, but that summarizes very much what we are doing. We are helping our client and the brands to add value. So I think that's pretty much everything that we do is adding value to our client brands through the labels, through etiquettes, and through packaging, etc. Next. Little bit Nilo. We had the headquarters here in Sweden, and on the picture to the right, you can see the manor house. We're sitting here in Borås. Borås is the textile mecca of Sweden. Still, it was a lot of, in the 70s, a lot of production here in Borås. And the Nilo was founded in 1977 as a design bureau by two gentlemen, Nilsson and Neil Earn. Since then, we went to the stock market in 1997, and with this money, they acquired a lot of production around in Europe, Germany, Belgium, Denmark, Sweden, UK, Portugal. And then the competition became too tough, so we closed a lot of production, most of the production here in Europe. So they are our sales units today, and we open up new operations around in Asia, where that is our sourcing and distribution unit. So we have clients, brand owners around in Europe, but the most of the invoicing and delivering and sourcing happens in Asia. We still have one production in Europe, that is in Portugal. The intention was to close it sometime years ago, but it was too expensive. But it was like 15 years ago. And luckily that, but because what we see now is more and more volumes moving back to Europe. So that is one of our success stories at the moment. We are almost 600 employees, whereof only 44 in Sweden. So we are not a huge company, but we are very international with production and sourcing around in the world. The headquarters in Sweden consists of the central IT, central retail information services, which is working with IT together with the customers. We have a central design studio, and we have finance as well, and the sales office. We are one of the leading branding and design companies in Europe, with a 90 million euro turnover in 2022. We were listed in 97, we were delisted in 2009, and we went back to the stock market again 2015. Yeah, next. This is a little bit about the journey. If you look into the left, you see no profitability. That what I used to call phase one, when we were we had a lot of production and we closed a lot of production. We were loss making for some years, and we changed the whole business idea. And then you can see from 2009 and onwards, there was an upgoing trend, both in the blue staples here, that is the sales, and also the gray line, that is the operating margin. There was a really turnaround case in that case. So what happens then, we decentralized and focusing very much on sales. with the sourcing offices around in Asia, and the sales offices now focusing only on sales. And we built up incentive models without sales organizations and very decentralized. What happens then in 2019-20? There was in 19 there was a tough situation in the UK, leaving euro, and then we also had in 2020 the pandemic, and that was pretty much the start of the big journey we're doing at the moment, where we're changing from being extremely decentralized, centralizing centralizing again to some extent, driven by the client. It's client driven. There's so much sustainability, CSR driven at the moment. So that is our sales, core sales, to be really good in sustainability, but also technical driven. And so we need to be more homogeneous within the group to get out the synergies. Being so decentralized, we ended up like 350 different external suppliers. We need to consolidate that base, and to be able to do that, we need to do that more centralized. And as you can see, after the pandemic, the trend has been our friend. Sales increased, and so has the margin. Coming back to that a little bit later on as well. Next. Here you can see that I mentioned, we are with the sales operations around in Europe. We have a production, as I mentioned, in Portugal, and all around here in Asia, where we have sourcing and distribution units. We have a full factory in Bangladesh as well, and we have a small production in Hong Kong and in Turkey as well. So we're building up network both through external suppliers but also internal suppliers. The goal is not to be a big production unit with own production, but to be more flexible using external suppliers as well. So there will be a combination. The reason for being a big factory in Bangladesh is due to local legislation that is if we should do local trading in Bangladesh, we will be hit by local custom duties and so on. And Bangladesh has also proven to be a real success factor for Nilo. We have two very, very tiny operations in US, one person in the East Coast and one in the West Coast. But it's thought to grow there, especially on the East Coast. So we will see how that goes. We just made a decision to start in Vietnam. So that is currently going on at the moment. We are supplying Vietnam today from Hong Kong. Next. Very short brief about our competitors. We have big competitors like Avery Dennison with a turnover of $8 billion, and we have Trimco. Trimco made a few acquisitions, whereof they acquired Atex. Atex was a Danish company, Danish group, very similar to Nilo, very lookalike Nilo, where we were in the same country, same size, etc. They have now been acquired by an American company lately. Yeah, I will not go through all these in details, but Rudolph Haak is a Swedish competitor, approximately half size as Nilo, and not listed. And there are Avery is listed, and yeah, so not so many companies are listed. Many of these are private owned. There is a lot of going on in the market at the moment, many acquisitions, and also many inquiries about companies going on. Next. And just to show you here what we're working on at the moment over the last years is very much structural, centralizing sourcing, focusing very much on CSR sustainability. Compliance is something that we employed. We are supporting our client in compliance. It is so much regulations about material and what you can write on the packaging and the labels and so on. So we need to be here and support our client. We also here with material to support our clients and guide them. We have made a material guide to get them what they are, support them in choosing the right sustainable material. And then system-wise is very much building up supporting system on this, and also towards our client. I'm coming back to that as well later on here. But for all this, we built up the organization and done investment in this to be in the forefront. There's no way out. I think either you will be in the front or you will be ahead of the competitors. The competitors will be ahead of you, sorry. But we decided to be in the forefront here. Next. And then you can see here on the right, this is what we call Nilo 3.0. 1.0 was when we had production, 2.0 was when we were with a lot of sales, decentralized, and now 3.0, where we want to be innovative, transparent, creative, fast, modern, and reliable. Next. Our sustainable journey. This is one of our Nilo's unique selling points. I think we are among the best in the industry on this, supporting our client, and this is a very tough area, especially for most. And there, I think that is also the reason why we see so many smaller competitors for sales, because it's so tough to be on top of all these areas. You need to have muscles to be able to do this. We started with this already in 2004, where we made our first code of conduct. In 2017, we employed our first sustainability manager of the group. She's really skillful. And now she has a team with the CSR people, both in Asia and in Europe, and where we work very systematically towards our client, provide them with information and material, and really guide them through this area. Next. Short about the product. This is a product you used to see with Nilo. This is the labels, all sorts of different labels, woven, textile, hang tag. So this is the traditional Nilo, what we're coming from. Next. We also focusing more and more, and we set up a division within Nilo focusing on the product. It's not just standardized product, it's more gift product, gift packaging and so on, more nice. And also we talking very much about recycled polybags. That is also one niche that we've been quite strong in. So packaging is something that will grow and continue. Next. RFID started. We were very early adapters with this, like 15 years ago when I joined Nilo, that we had that in our showroom. It was too early. It was costing too much money, but now this is coming more and more from the client demand. This is more a logistic solution. They will know for sure exactly how much they have on the stock of different garments. Every garment will have a unique identity, and they can be scanned very easily through these by hand scanner, so they know exactly how much they have of each and every garment, which is very useful, especially in when you're selling e-commerce business, because if you're out of stock and you think you still have stock, then it will be complicated. Not as much complicated if you have a physical store, because if it's out of stock, then you don't have any product to show. So so this is very good for, especially for the e-commerce business. Next. Another area, as I mentioned, we becoming more and more technical, and we need to invest in this area is RFID, but also Nilo Connect. Nilo Connect is where our client or end user and consumer have a QR code or NFC chip on the garment, where you can provide information where it's produced, sustainability information, and how to wash, care instruction, etc. So this is what we are building up. We're building up information that we provide our client, so they can see all the statistic behind this, and they can change this information that you as the end consumer. So this is an area that we are spending much resources in at the moment. Next. We have 3 core values in the group. Innovation. We want to be innovative. We need to find the creative solutions. We need to be respect. As you know, we are in many countries in different areas, so we need to respect for each other, and also for different culture, different religions, and so on. So that is crucial, both internally but also externally. And take responsibility. We want all the employees to take responsibility to their taking and making a mistake, but also take responsibility to make the change within the group. Next. These are the financial targets. They have been there for quite some time. You've probably seen them in the past. We should receive a growth over the 7% and operating margin of 10%. And we have had that, as you know, for quite many years. Next. Just to show you here a bit about the Q1, Q2, Q3, and Q4. This is the sales, and as you can see, Q1 sales last year was very strong, a little bit slower this year. What was good this year, we started up in January very, very slow. February was a little bit better, and March was better than February. And so we will see how it goes in the Q2. But you can see also in the Q2 we have extremely high comparison numbers. The really strong Q2 last year, but also then if you're looking at Q3 and Q4, they are not that. The comparison number is not that intense. Next. And that is the same with the profitability, as you can see, they follow the same as the sales. Next. Yeah, just a summary of what we presented here for Q1. Order income minus 21%. We had still quite some stock level. And the way we measure stock is that when we're placing a purchase order, then we have stock. So assume no order income at all, we will deliver out all the stock because, so we are working quite hard on the balance sheet at the moment, try to reduce the stock level. Sales was minus 9% and minus 13% adjusted for the currency. Operating profit of 17 and 40 last year. We made an acquisition at the year-end, Bally Labels in Switzerland, which made a small contribution. We have had a positive development in the luxury segment, and I think this is really great to see when the big markets like in UK, Sweden, and Germany have a weaker. And what we feel here, what has been weak in these markets is especially the outdoor. They are the one that is suffering in the Q1 here. Built up too much of stock level. They are really good brands. We are not afraid of them, but they had a fantastic development during the pandemic, and then they cut down the stock, ending up in too much stock. So that is what we're suffering from at the moment. But then we have a positive development in Italy and France. Still our production units in Bangladesh and Portugal continue as well. And we decided to establish in Vietnam. Next. Yeah, I talked about what we are building at the moment here with all this area. So next. Yeah, that is pretty much that. We've seen where we were coming from here, starting already from the beginning of year 2000 with all the production, closing the production, ending up with a very decentralized sales organization. Now try to get out the more and more synergies. We see also the trend in the market where it's much technical driven and also sustainability driven, and also of design, of course, but maybe less about the product, more about the service level around. So that is what we are facing and building up the organization. So we are in a shift, you would say, and there is a lot of going on in the market. But I think it's exciting, and I'm sure we will get there through all these areas where we are putting investment in. Thank you. So if any questions, please, you're welcome.
Presentation, Christer. A few questions from my end. Could you perhaps describe the business momentum right now? Do you think that things are getting better compared to Q4 2022? Is there any feeling that you'd like to share with us?
No, not the Nilo number, but I can share. I mean, the general in the market, I think still some companies have too much of stock, but I also see that especially in the outdoor, I think that's still the case. But we also see that in other areas that it's starting to take off. And I think it's underlying optimism towards the autumn side.
Yeah. You mentioned that you're looking to invest, at least in your quarterly reports, that you're aiming to invest in Bangladesh and still in Portugal. Approximately when can we expect these investments, and is there perhaps a figure that you could share with us if you would like?
In both in Portugal and in Bangladesh, we are looking for buying land. In Portugal, we know what land to buy. We also know what price and so on. So what we're doing there in Portugal at the moment is that we're investigating for toxics and so on in the ground, and to make sure that we can buy that without any problem. But I assume, even though we buy the land this year, the building will not start until 2024. And the same also in Bangladesh. We identified some land. We have not made the final purchase there, but that will also take quite some time. Investment-wise, we have not said, but the investment will be less big in Portugal because that's an extension of existing factory. In Bangladesh, it will be bigger because there will be a complete new greenfield project.
Yeah, and could you perhaps share with us the rationale for investing in Bangladesh and Portugal in this case?
I think in Bangladesh, the rationale behind that is that to be there, we started off as a trading company. The rules has changed in Bangladesh. So for us to be able to be competitive in Bangladesh, if we should import to Bangladesh, we get hit by like 100% custom duties. And if we're doing local sourcing and selling Bangladesh, we cannot push the VATs. We have to take the cost for the VAT locally in Bangladesh in our own books. Yeah. Completely. So, and also we've seen the CSR and also getting the good quality in Bangladesh has been an issue. So therefore we started up with our own production, and that has proven to be really, really successful. And the reason why we want to move this now is we are completely full. We are more than full. We cannot expand the factory, but we have the demand. So, and then my thinking was that we set up another factory. We run two factories. But the legislation in Bangladesh and so on is that if that is the case, then we need to run with two companies and so on. So we said that we better move the whole factory and start from there. And where we own today, we don't own the land today. So we said that to be long-sighted in Bangladesh, we try to find our own land and build on that instead of renting.
Yeah, absolutely. It's a good problem to have. Demand. That's a good thing to have.
Yeah,
in general.
it's a good problem. Yeah. And also the same, also in Portugal, I think the factory is more than full at the moment. We are outsourcing. We have 2 external warehouses, so it's not efficient. So we try to make it more efficient.
Yeah. You mentioned that you've expanded into the luxury segment, at least in Italy and France. Could you share with us at least how do you think it is going for the clients? Do you think they're doing well? And is this a segment where you could see that you can potentially expand a little bit more into?
Yeah, absolutely. And I think this is an area looking at the luxury segment, they are a little bit different compared to other segments. They're very keen about the quality, and they're very keen, and they're doing a very, very careful research before you can be a supplier. They visit the factories and they're doing due diligence and so on. But I think once you get in there and once you manage to give them a good service, you are in. And we managed here to take a few good brands on board. And now we really need to work hard on providing them a good service to prove to them that we are reliable suppliers. And like in Italy, these luxury brands, they want European supply. They don't want Asian supply. They are very keen. We want European supply. That's why we can have our own factories, but we also need other supplying partners in Europe
Absolutely. Well, I'm afraid that we're out of time now, Christer, but thank you very much for presenting and for answering some questions. And thank you to everybody else for listening.
Fine. Thank you. Thanks.